In this video, let's explore whether solo 401k or SEP IRA should freelancers choose. If you're a freelancer and you're not using one of these two retirement accounts, you could be leaving thousands of dollars on the table every single year. Today, we're breaking down the solo 401k versus the SEP IRA, two of the most powerful retirement tools available exclusively to self-employed people. By the end of this video, you'll know exactly which one is right for your situation. Welcome back to the channel, where we help freelancers take control of their financial future. If you're new here, make sure you hit subscribe so you never miss a video on taxes, retirement, and building real wealth as a self-employed professional. Let's talk about taxes. Here's the reality. As a freelancer, you don't have an employer matching your 401k. Nobody is automatically setting money aside for your retirement. That means it's entirely up to you. And the good news? The IRS actually gives self-employed people some incredible tools to save and pay less in taxes while doing it. The two best options are the solo 401k and the SEP IRA. Let's start with the basics. So, what is a SEP IRA? A SEP IRA stands for Simplified Employee Pension Individual Retirement Account. It was designed specifically for self-employed people and small business owners. Here's how it works. You can contribute up to 25% of your net self-employment income, with a maximum of $72,000 in 2026. It's incredibly simple to set up. Most brokerages like Fidelity, Vanguard, or Schwab let you open one in under 15 minutes. And you can open a SEP IRA and make contributions right up until your tax filing deadline, including extensions. What is a solo 401k? A solo 401k, also called an individual 401k or self-employed 401k, is designed for business owners with no employees other than themselves and their spouse. This account has two contribution buckets. As the employee, you can contribute up to $24,500 in 2026, or $32,500 if you're 50 or older. Then, as the employer, you can contribute an additional 25% of your net self-employment income. Combined, that means you could contribute up to $72,000 per year, the same ceiling as the SEP IRA, but with a much more powerful way to get there faster. The big difference: low-income scenario. Here's where the solo 401k really shines. Let's say you're a freelancer earning $50,000 a year. With a SEP IRA, you can only contribute 25% of your net income. That's about $9,293 after the self-employment tax deduction. But with a solo 401k, you can contribute up to $24,500 as the employee portion alone. That's more than double what the SEP IRA allows at that income level. If you're in the early or mid stages of your freelance career, the solo 401k almost always wins. High income scenario. Now, what if you're earning $200,000 or more as a freelancer? At that income level, both accounts approach the $72,000 contribution limit. The gap between them shrinks significantly. For very high earners, the SEP IRA becomes more competitive because its 25% employer-only contribution gets you to that maximum faster and with less paperwork. Have you wondered which option allows Roth contributions? Here's a feature that could matter a lot depending on your tax situation. The solo 401k allows Roth contributions. That means you can put money in after tax today, and it grows completely tax-free. And you pay zero taxes on withdrawals in retirement. The SEP IRA does not have a Roth option. All contributions are pre-tax, which is great now, but you will pay taxes on every dollar you withdraw in retirement. If you expect to be in a higher tax bracket in retirement, or if you want tax diversification, the solo 401k's Roth feature is a major advantage. How about, can you loan from your account? Need access to cash in an emergency? The solo 401k allows you to borrow up to 50% of your account balance, up to $50,000, as a loan to yourself. You pay it back with interest, but that interest goes back into your own account. The SEP IRA does not allow loans. If you need money, you'd have to make a withdrawal, which means taxes and potentially a 10% early withdrawal penalty. Next, let's discuss the setup and admin. Let's talk about the practical side. A SEP IRA is one of the easiest financial accounts to open. There's almost no paperwork, no annual filing requirements, and any brokerage will help you set one up. A solo 401k is slightly more complex. You need to set it up before December 31st of the tax year. You can't wait until tax filing time like you can with a SEP IRA. Also, once your solo 401k balance exceeds $250,000, you're required to file a Form 5500EZ with the IRS each year. It's not complicated, but it's an extra step. Employees, the deal breaker. This is critical. If you ever hire employees, even part-time workers, you can no longer contribute to a solo 401k. The solo 401k is strictly for businesses with no employees other than the owner and their spouse. If you plan to grow a team, a SEP IRA is the safer long-term choice because it can accommodate employees. With a side-by-side summary, let's recap the key differences. Contribution limits, both cap at $72,000, but the solo 401k gets you there faster at lower income levels. Roth option, solo 401k, yes. SEP IRA, no. Loans, solo 401k, yes. SEP IRA, no. Setup deadline. Solo 401k must be opened by December 31st. SEP IRA can be opened at tax filing time. Employees? SEP IRA works if you have or plan to hire employees. Solo 401k does not. Simplicity. SEP IRA wins for ease of setup and maintenance. Which option should you choose? Choose the solo 401k if you earn under $150,000 a year and want to save more faster. You want a Roth option for tax-free growth. You're a solo freelancer with no plans to hire employees. Choose the SEP IRA if you want the simplest setup possible. You earn a high income and are already maxing contributions easily. You have or might hire employees in the future. Regardless of which option you choose, it is important to act now. Both of these accounts are dramatically better than doing nothing. So if you haven't opened one yet, today is the day to start. If this video helped you, drop a comment below and let me know. Solo 401k or SEP IRA? Which one are you going with? Don't forget to like this video and subscribe for more freelancer finance content every week. And if you want to go deeper, check out our next video on how to actually reduce your self-employment taxes. See you in the next one.